So total revision of the costing part. Tell me what is absorption costing?
Absorption costing is basically long-term costing, which takes total cost into account, which is variable cost and the fixed cost.
And what is marginal costing?
Marginal costing is only taking the variable cost into account.
What is marginal costing helpful for?
Short-term decision making.
Short-term decision making. What is the other name for marginal costing?
Variable costing.
Marginal costing, the other name is variable cost. Can you give me
Acha.
the format of the marginal cost statement?
So in the marginal cost statement, it starts with the sales, then you minus the variable cost, which will give you the contribution. Then you minus the fixed cost, that will give you the profit or loss.
If you have option A and option B, supposing you have option A and option B,
Hmm.
okay, and in one of the options, you have to pay direct labor as overtime.
Yeah.
What will you do?
uh, if I have to pay direct labor as overtime, so what I'll do is I'll make two different paths where I make one for the like not overtime and however like how much ever is overtime workers ka. Then I'll calculate the contribution for both. I'll add it.
Minus variable cost, you will come up to contribution. This will be always per unit.
Yeah, and then you multiply it with how many ever units are there.
Then you have total contribution.
Yeah, you add it and then you minus the fixed cost.
You will minus the fixed cost. Fixed cost is always based on which production?
Mm,
The actual production, or it is based on the budgeted production?
the actual production.
Fixed cost is always based on the budgeted production because you budget the total fixed cost and you budget the units.
Okay.
Okay. What is the formula for contribution to sales ratio?
Contribution upon sales into 100.
Marginal cost statement, you told me. Contribution, how do you get?
You do sales minus variable cost.
Okay. Profit, how do you get?
Contribution minus fixed cost.
How do you get the break-even point?
Break even is fixed cost upon contribution per unit, which will give you the units by, and then if you want it in revenue, it will be fixed cost upon CS ratio.
What is margin of safety?
Margin of safety is the actual revenue minus the break even revenue.
Or actual sales minus break-even sales, actual production minus break-even production. How do
Hmm.
you find the margin of safety percentage?
Margin of safety upon revenue into 100.
Okay, optimum product plan, how do you calculate?
So there'll
What is an
be,
optimum product plan?
hmm?
What is an optimum product plan?
So basically they give you a limiting factor and now you need to find a way to profitably use that limiting factor to make the highest profit.
Okay, how do you do that?
So first, you divide the contribution by the limiting factor. Then you get contribution per limiting factor.
Hmm.
Then after that, you have to rank them according to whichever has the highest contribution.
Hmm.
Then
What is,
according
yeah, tell
uh,
me.
and according to the ranking, you will distribute the units.
How do you, what is the benefit of break-even analysis?
It identifies how much profit is made. It identifies the margin of safety. It's easy to understand. And basta.
What is production overheads?
Production overheads is the indirect cost of a factory that is directly traceable to its product.
If you want to accept or reject a proposal based on the financial factors, what would be the financial factors that you would consider?
Whether it increases the sales or not, if it has a higher contribution, and if the fixed costs are increasing or not.
And non-financial?
If the quality of the quality of the product changes or not, how it affects the workers and how it affects the customers.
Can you give me features of marginal costing?
The elements of cost are differentiated between fixed cost and variable cost. Only the variable or marginal cost is considered while calculating the product cost. Stock of finished products and work in progress are valued at variable cost. Fixed costs do not. find a place in the product cost.
Okay, you can tell me evaluation of closing inventory. Okay, in absorption costing, closing inventory is valued at what price?
The variable cost,
In absorption costing, closing inventory is valued at what price?
total cost,
Total cost. Okay, total cost is made up of what?
fixed cost and variable cost.
Fixed cost plus variable cost. In
Hmm.
marginal costing, inventory is valued at what price?
Variable cost.
So there, if there is a difference in the profit between the profit as per absorption costing and profit as per marginal costing, it will be
Hmm.
because of what?
Closing inventory
Included in? It
included
will be because of the fixed cost element that
include
is included in the closing
closing
inventory.
inventory.
Okay, fine. Now you know this. Tell me what is marginal cost of production?
Marginal cost of production is basically the direct material plus direct labor plus overheads, which gives you the
Plus
total.
direct expenses. Overheads is fixed cost. Understand? Marginal means only the variable cost.
Okay.
So
So
marginal
that
cost of production would be direct material plus direct labor plus direct
other
expenses
expenses.
related to production.
Hmm.
Okay, what is marginal cost of production?
It is direct materials plus direct labor plus direct expenses related to the
Related
product.
to production. In that, if you add the variable selling expenses, then it will become what?
Variable selling expenses will become the total cost.
Marginal cost of sales.
Okay.
Okay, there is two things. One is marginal cost of production, one is marginal cost of sales.
Okay.
So marginal cost of production is what?
Direct materials, direct labor, and direct expenses related to production.
In that, if you add the variable selling expenses, it will become
Marginal cost of sales.
okay. In the marginal cost of sales, okay. If you add the fixed cost, you will get the total cost.
Total cost.
Okay, these are three different things. What is the uses of marginal costing?
It is to make short-term decisions
Hmm.
and to understand whether to accept orders below the normal selling price.
Hmm.
Then understanding how marginal cost helps in pricing.
Okay, very good.
Miss, I have a question.
Hmm.
When commission is given,
Hmm.
like they tell us to add like a 0.5% commission to each this thing. So you add it to direct labor, but isn't it a fixed cost?
Commission, if it's a percentage of something,
Hmm.
that means it's variable, right?
Okay.
Because it will change as per the thing.
Okay. So if it's given as a whole number like 3,000,
Hmm.
so that I'll minus from the contribution
I
only.
don't know what question are you relating to now. I
No,
cannot.
I'm just saying it like that only because I was doing a question and in the MS I got it wrong then.
Okay, what is meant by contribution?
Contribution is the revenue, the selling price minus the variable cost.
Oh, okay, fine. Now here you have to make an optimum product plan. The ranking is also given and the hours required is also given.
Okay.
How will you make the optimum product plan? Now hours required is not given to you. Come on, tell me how will you make the optimum product plan? You have only 78,000 machine hours.
Hmm.
Here the
O-
ranking is given to you.
Okay, so it's
Okay.
hmm.
Every product you can make 12,000 units maximum.
Okay.
And the number of machine hours is here.
Okay, so wait. So for the first one, the ranking C, the C1, it's first. So
Yeah.
you'll do 12,000 into two, no,
Four, na?
into four,
Yeah.
which will give you for
48,000 hours.
48,000, 48,000 hours.
You have
Then,
total 78,000 hours.
yeah,
From
so
that you will minus
minus
48,000.
48,000.
What will
So
you get?
30,000,
Hmm.
30,000 is left. Now for product B also,
Second
uh,
ranking is product A.
Acha, हाँ, second ranking is product A. So you'll use 24,000 units.
No, 12,000 is your maximum units.
Yeah, I meant 24,000 hours. So 12,000 into 2.
So minus 24,000 hours. What will you get?
You'll be left with 6,000 hours.
Yeah, now for product B.
Now this is for product B only, na 6,000 hours.
So how many units of product B will you make?
Okay, wait. So 24,000 means
First, you will say for 1 unit, you need how many hours?
for one of product B, you need for 1 unit you need 4 hours.
How
So
many
for
hours you have?
6,000 hours.
In
So
6,000 hours,
6,000
how many units you can make?
1,500 units.
So it will be 6,000 cross multiply.
And
6,000
yeah,
divided by 4 is equal to
4,
1,500 units
1,500.
you can make. So your
Hmm.
optimum product plan would be how many units you're making of C,
Of
then
C.
A, and then B.
Hmm.
Are you with me?
Yeah.
Okay. 1 minute, hang on. The assumptions while using marginal costing.
That fixed cost will remain constant. All products are being sold, and that the cost can be split into fixed cost and variable cost.
What is variable cost?
Variable cost is the cost that changes as per output.
And semi-variable cost?
Semi-variable costs are the costs that are partially fixed and partially variable.
Fixed costs.
The costs that do not change with output.
Okay. 3 ways in which introducing a system of budgetary control will help the department managers of a business.
So first, it will help set a target which will motivate the business.
Hmm.
Then uh, the other advantage can be that it will help make them more efficient, the managers more efficient.
Okay.
Then even workers will get more motivated because they have a target to achieve.
Okay, fine. Advantages of break-even point.
It's easy to understand and it helps identify the margin of safety. It helps identify the profit and what else is there? It provides information in a easy to understand format.
Define margin of safety.
Margin of safety is the difference between the actual revenue and the break-even revenue.
Or advantages to plan for the future.
Uh, First is identify underperforming products, then ensure sufficiently skilled labor is available to meet production,
Hmm.
ensure sufficient finance is available to continue operations and
Hmm.
any and investments, and it ensures the quality or the cost of material and discounts can be obtained from suppliers.
What is meant by piecework payment?
Piece payment is basically when employees are paid according to the number of units that they produce.
And production overheads.
Production overheads are the expenses that are directly related to the uh, production of the product.
Okay. Limitations of cost volume profit.
It assumes that fixed cost remains constant
Hmm.
and that all output will be sold and that selling price will remain the same. And that
Benefits.
benefits will be that it helps in short-term decision making. It's easy to understand and
3 issues that you should consider before changing a supplier.
if the same quantity will be delivered, how fast they can deliver the products, and the same credit terms will be provided or not, and the cost of the products.
What do you mean by allocation?
Allocation is when the expenses are related to only one department.
Apportionment.
Apportionment is when the expenses are related to more than one department and are distributed on suitable basis.
Absorption.
Absorption is when the total of allocated and apportioned overheads is charged to units of production.
Okay. You know absorption, right?
Yeah, I didn't remember what it was.
Okay. Break-even point meaning
Break-even point is at the point at which there is no profit or loss.
suggested reason for decrease in the direct material price,
Benefiting from economies of scale or receiving
increase in direct
discount.
labor, reason for increase in direct labor.
Overtime rates or increase in basic wages. You can even say commission now, where
How commission is related to labor, I'm not understanding.
Miss, when they give percentage, you can
Commission is
say na.
related to sales.
Acha,
If
okay.
you sell more, you will be given more.
Okay.
Why fixed costs increase?
If you start advertising, then your fixed cost will increase. Then, I don't know what else is written.
If your rent has increased, depreciation has increased, supervisor salary has increased. So these are the reasons for increase in the fixed costs.
Hmm.
Okay. Okay. Assumptions of using CVP analysis.
What?
Assumptions of using CVP analysis. What is CVP analysis?
Cost volume profit analysis.
Hmm?
Cost volume profit analysis.
What is the other name for it?
Break even analysis.
Yeah. So what is the assumptions for it?
That selling price is constant, fixed cost is constant, variable cost keeps changing, and that all output is sold.
Hmm?
And that all output is sold.
No. Advantages of CVP analysis.
First is that it helps calculate the margin of safety and the break even and how much profit you need. Then it is easy to understand and interpret.
Hmm?
It's easy to understand. Limitations of absorption costing is that it cannot be used in short-term decision making. It is more complicated to calculate. And what else? I can't. Miss, can you zoom in?
It is
Hmm.
time
It
consuming
is
to
time
calculate
consuming to
OER.
calculate. Yeah,
Hmm.
and then you have to adjust for overhead and underhead absorption. This what does arbitrary mean?
It is based on assumptions.
Okay.
Okay. They ask you to make the income statement,
Hmm.
absorption costing income statement. Yeah, you start with sales
Yes, then the opening
minus
inventory.
the cost of goods sold.
Yeah, minus the cost of goods
Now
sold.
understand one thing: if marginal costing and absorption costing both income statement is there,
Hmm.
okay, then
Okay.
your fixed cost will be included in the opening inventory also. It will be included in the closing inventory also.
Okay.
Okay, remember that. If you're finding the cost of production, then
Hmm.
cost of production will have variable cost and it will have fixed cost also.
Hmm.
And if you're calculating fixed cost, it will be OAR into the number of units. Just
Oh.
keep that in mind.
Miss, has the income statement ever come before?
Check the
Yeah.
units
So what
produced.
is,
You don't have to minus closing inventory. You don't have opening inventory. Just the cost
yeah,
of sales. I have taught you the easier way.
yeah, so that way I don't remember this way.
Okay, fine. What do you mean by FIFO, LIFO?
FIFO is first in, first out, where the inventory that is bought first is sold first.
LIFO
LIFO.
advantages.
So LIFO is easy to calculate and I don't know the second one, may correspond to flow of inventory.
Top of the pile.
So
That
what is
means
it?
what is seen first is removed first.
Okay.
Okay. So
Hmm.
LIFO method corresponds to actual inventory flow in the godown.
Okay.
The meaning of average cost.
Average cost is when the unit cost of each inventory is calculated at each point. The advantage is that it takes account in like inflation, increase in prices, and it is approved by IAS too.
And provides average price for the goods sold.
Huh.
Why you should value your closing inventory at lower of cost or selling price?
Because it's said in the principle of prudence that you're supposed to take the lower of both
Lower of what both?
the cost price and the selling price.
Okay. बस इतना ही.
Oh.
Yeah,
Yeah,
nothing more.
I don't remember anything.
Okay, you should value your inventory at lower of cost or selling price because according to the concept of prudence, your assets should be shown at a more realistic value
Hmm.
and profits should not be overstated.
Yeah, okay.
Okay, there is this thing where there is reconciliation. This has only sums of reconciliation between the marginal costing income statement and absorption costing income statement. You want me to send it to you and you want to try?
Now, Miss, can you send it to me?
Okay, fine.